I want to share an awesome buy-sell indicator that works wonders on TradingView. It's called CM Donchian Channel version 3. And it's perfect for crafting a solid trading strategy, whether you're a newbie or seasoned trader. This bad boy helps you spot potential entry and exit points by showing the highest high and lowest low over a specific time frame. To get started, head over to the TradingView. Once you're in, pick a chart you like to analyze. You can choose any stock, cryptocurrency, or other financial instrument you're curious about. Now, take a look at the top of the TradingView platform. See that menu bar? Click on the Indicators button to open up the Indicators section. Inside the search bar, type in CMA Donchian Channel V3. As you type, you should see it pop up in the search results. When you spot it, go ahead and click on it, and voila! You'll see the Donchian channel nicely overlaid on your chart price. Once you added the CM Donchian Channel V3 indicator to your chart, you'll want to make a few simple adjustments to optimize its effectiveness. Head over to the indicator settings, which can access by clicking on the gear icon next to the indicator's name on your chart. In the settings menu, navigate to the input section. Here, you'll want to disable show arrow options, as these can clutter your chart and make it harder to read. However, make sure to keep the bar colors and midline options enabled, as these are crucial for your analysis. Next, you'll want to make the midline more visible. This line is essential because it acts as a reference point for potential trade entries. A price movement above the midline can be seen as a bullish signal, while movement below it can be interpreted as bearish. By making the midline more prominent, you'll have a clear visual cue for those important signals. Now it's important to understand how to use the midline effectively. When the price breaks above the midline, it can be a signal to enter a long trade, anticipating that the price will continue to rise. Conversely, when the price breaks below the midline, it can be a signal to enter a short trade, expecting the price to fall. This midline essentially helps you determine the trend direction and make more informed trading decisions. But hold up your horses. Don't rely solely on this indicator, or you might end up with losses, especially when signals go against the trend. The CM Donchian Channel V3 is a powerful tool, but it works best when you team up with other indicators and analysis methods to confirm signals and steer clear of false signals. Real quick, before we dive into the second indicator, do me a favor and smash that like button, and don't forget to subscribe to TradeGenius channel. By subscribing, you'll unlock a treasure trove of over 300 killer trading strategies that'll help you crush the game. Alright, let's get back to the good stuff, our killer strategy. Next up, we're bringing the big guns with the trend ribbon indicator. This baby is a beast at spotting trends and will seriously level up your trading game. To add it to your chart, just hop on over to the indicators section on TradingView, click indicators, and then type trend ribbon into the search bar. When it pops up, give it a click to slap it onto your chart. The trend ribbon indicator is a trend following powerhouse based on moving averages. By default, it marks a 20-period weighted moving average, but for our strategy, we want to catch those long-term trends. So you need to dive into the indicator settings and the inputs tab. Switch up the moving average length from 20 to 200. This tweak will help you lock in on big picture market trend. Once you got the moving average length dialed in, let the ribbon size and smoothing options chill at their default settings. They're usually spot on for most trading situations, so no need to mess with them unless you've got solid reason. Next, swing by the style section on the settings. You can make the ribbon pop up on your chart by playing with colors and thickness. That way, spotting trend direction will be a piece of cake. Using the trend ribbon to spot trends is a breeze. If the ribbon's green and price candles are chilling above it, The market's in an uptrend, meaning it's all sunshine and rainbows, and a sweet time to look for buying opportunities. But if the ribbon is red but price candles below, that's a downtrend, signaling a stormy weather and a chance to consider selling or shorting. Keep an eye on the ribbon's thickness too. If it's thin, no matter if it's green or red, the market is probably stuck in a sideways funk or consolidation phase. Best to wait for a clear trend direction before making any moves, because trading in a sideways market can be a wild ride with unpredictable price action and false signals. Now let's dive into entering a buy trade. First, hunt for a bullish breakout of the midline on the CM Donchian channel. This breakout shows up the price is gaining some upward steam, but hold your horses. Make sure the trend ribbon is also green and the price candles are above it, confirming an uptrend. When both these conditions give you a thumbs up, it's a solid signal to enter that buy trade. For setting a stop loss, use the most recent swing low as your safety net. It'll shield you from sudden market U-turns. As for take profit level, aim for a target that's 1.5 times the risk of your trade. That's a smart rule of thumb. So after you enter your initial buy trade based on the bullish breakout of the midline and confirmation from the trend ribbon indicator, you might notice another buy signal in the uptrend market. This is a great opportunity to enter another trade, since the market is still in an uptrend, as indicated by the green trend ribbon and the price candles staying above it. The second buy signal is likely to be profitable as well. However, at some point you might see a sell signal. It's important to remember that since we're in an uptrend, this sell signal should be filtered out. The trend ribbon indicator helps you to avoid taking losing trades by confirming the overall market direction. In an uptrend, sell signals are often false and can lead to losses if acted upon. By ignoring the sell signal, you avoid a potential losing trade. Shortly after filtering out the sell signal, you might get another buy signal, since the market is still in an uptrend as confirmed by the green trend ribbon and the price candles remaining above it. This new buy signal is another opportunity to enter a profitable trade. The key here is to consistently follow the trend and use the indicators to confirm your entries. When considering a short trade, look for a bearish breakout of the midline on the CM Donchian channel. This breakout suggests that the price is losing momentum and potentially heading south. However, it's crucial to confirm that the trend ribbon is red and the price candles are below it, ensuring that the market isn't in a downtrend. Once these conditions align, you can make it as a good signal to enter a short trade. As for risk management, set your stop loss at the most recent market swing high to protect your trade from sudden price surges. For the take profit level, aim for the target that's 1.5 times the risk of your trade, maintaining a reasonable risk-to-reward ratio. And you can also check out these examples to get a better understanding of this great buy-sell strategy.